Well, hello, folks. How are you? I hope you're doing well. All right. As you can see, we are open for business. Okay. Happy Monday to you all. Hope you had a very nice weekend. I felt some pretty strong headaches. I'm not sure what it is, but it's still there a little bit lingering. I think it has to do with my sinuses, maybe some allergy related things. But thank you for your concerns and for those that have been sharing their well wishes in regards to that. So I want to look at the Thursday evening of last week. You can see that we had 7 p.m. to 10 p.m., which is the Asian session. So if you're going to be trading Asia, those are your operating hours. And I highlighted in a very short little quiz how you can use these types of times of the day. And in between these two vertical lines, you can see that there is a very prominent price leg from this high down to this low. Okay. Can you see how that is obvious between those two vertical lines? It's pretty specific. It's hard not to notice it. Okay. Um, by grading that, it's useful this morning because going back 3 sessions. Okay. So here we have Monday. So we have overnight trading Monday. So we have London session there. Okay. Then we had Friday's session, PM and AM. And then you have the Asian session leading up to Friday. So by having these look back periods for where we can frame key dealing ranges, price when it is inside of this high and this low, and we'll go forward, you can see how it was used here all through Friday. And then trading into Friday's PM session. Right back up into that range. And then we closed right here, running us into what? New day of trading starting at 6 p.m. Eastern time, which is also new week of trading. So new week opening gap forms, ironically, right here in the middle of that range. So let's expand this a little bit. Where the new week opening gap occurs using 0.375 octant and lower quadrant of Asia's of last Thursday's dealing range between 7 p.m. and 10 p.m. Eastern time. We have this candlestick here with a volume imbalance there and a volume imbalance right here on this candlestick. So it's a buy side imbalance, sell side efficiency. The market trades down into it here. Look at the bodies. This is last night during Asia, by the way. Look at the bodies. It's staying in the upper half. That's real order flow. Okay. That's not shown in depth of market, footprint, volume profile, Wyckoff, Elliott wave. Okay. That's my logic. Okay. So you can see how it's staying in the upper half of a key PD array anchored to the 0.625 octant of last Thursday's 7 to 10 Asia's dealing range. Relative equal highs, the market rallies up off of that. Uses several things in here. I'm not going to draw everything out. This is the part that you do your own study on. But we take buy side here, and then right here, we pull right back down into that same bullish PD array. Notice the time it's forming. New week opening gap, and it's still inside of what? What time of day is that? I think it's the first 10 minutes. So while we're not open at 5:50 p.m. Eastern time yet on a Sunday, that first 10 minutes, very, very key PD arrays can form. And there you have it. And here you have it again. Whoa, look at this. Look, 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 look. Look at this randomness. Key PD array. Again, based on a specific dealing range. No other school of thought, no other discipline is going to take you back to that thought process of Thursday's Asia's dealing range. Nobody has that, folks. Nobody has that. But the algorithm that some of you don't want to believe exists, that's what it's going to refer back to. Now, there are other dealing ranges since then, yes. But I taught in the Trader Roundup, you want to look back, 3. But if you're looking at right now trading, just go in and use the most recent one that formed, whatever session you're trading. Okay. So, same logic here. If it's bullish, the bodies need to stay in the upper half. And now, watch. We have relative equal highs right there. So, we have buy side. Make sure this video isn't too long. No, no, no. Go ahead, Michael. Keep going. I know how you guys think. I have breakfast plans with the queen, okay? So I can't spend too much time. So during the 9:50 p.m. Eastern Time to 10:10 p.m. Eastern Time, that's the macro, towards the end of the Asian session, where the best of the trading for Asia is really taking place between 7 o'clock and 10. But the last macro is there, and the bodies are respecting that PD array that formed in the first 10 minutes of trading after new week opening gap formed right there. New week opening gap is down here. New week opening gap is a draw, but when we're using these levels like this, it's got to be supported with the likelihood of it going higher. And if we show a willingness to displace higher, which we do here, it has nothing to do with engulfing anything. Okay, it's just showing a willingness to move away quickly, justifying this as a key PD array that's a discount. Last sell side imbalance, buy side efficiency. Before was consolidation and turn. That's an inversion fair value gap. Look at the bodies right there. Is it respecting the upper half? Yes. No volume profile, no level 2 data, no footprint, nothing else required. It's all there. Okay. Then what happens to price? It rallies up, goes into upper octant, creates another little volume imbalance here, rallies higher. Again, the buy side is up here. Okay, the buy side imbalance, sell side inefficiency there. Look at the body respecting that. Now, if it's just support and resistance, why didn't it just stop at that candlestick low? Why didn't it go down to here? Why didn't it go here and stop? No, no, no. And this is a mohawk. This is permissible. Why? Because it's got a volume imbalance over here it has to utilize. The bodies are telling you the narrative. Then it runs for the buy side there. Goes a little bit higher. Fancy dances around. One more time comes back down into the buy side imbalance, sell side inefficiency that's anchored to the percentile high, the highest one of the last Thursday's Asian session dealing range high. That's what this level is here. And it has a PD array forming right there. Well, look at that. And the bodies are now outside of it. Is that bullish or bearish? It's bullish. Buy side's here, so it's likely to be taken. Rallies higher. Like that. Like stuff works, isn't it? And we dip back down in here. Consolidate. And now we have, again, new week opening gap down here. Okay. So be mindful that it could draw down into that and make an attempt to get in here because we have a little bit of consolidation here. This looks eventful. In other words, it looks like it did some damage up here. Maybe traders are offside and they may want to rake them across that. So I'll be looking for reasons to see if we can get some kind of structure, framework, whatnot, to support an idea that runs us back towards new week opening gap. It doesn't have to do that this morning, but it's something I'm going to at least look and and see if there's anything that would justify such a price run. And that's going to be it for this morning. I'm going to wish you all a very pleasant day. I won't be able to talk with you until probably this afternoon around market close. So until then, Lord willing, I will talk to you then. Be safe.